Hey, welcome back everyone. It is time for another red hot covered call video. Hey look, today we're going to talk about why I think the covered call strategy, the cash secure put strategy, is the best strategy for 2019. Now look, if you've been a part of my channel, you know I'm a bit biased about these strategies. The selling premium strategy. Look, I've had so much success using covered calls and selling cash secure puts over the past 3 years. I am absolutely convinced that selling risk to other people and collecting a premium, that is absolutely the best way to use stocks in the stock market. Now look, I have a buy and hold strategy, but what I've done over the past 3 years is I've chipped off a little part of my portfolio and I use that money to buy stocks and then write covered calls and sell cash secured puts. And when I do that, over the past 3 years, I've been able to generate over $113,000 in profits. And look, that is no BS. Those are real numbers, and I have shown everyone on my YouTube channel throughout the years how I've done that. And I'll tell you what, if this is the first time you've ever been to my channel and you're absolutely scratching your head thinking, man, is this guy telling the truth? I'm going to tell you right now, it's absolute fact. You have to get your financial education. You have to get your experience so you feel it, and when you feel it, you own it. And I'll tell you what, you do one trade, 2 trades, and all of a sudden now you become the expert. Look, in this video, I'm going to talk about how people are paying these secret sauce gurus just thousands of dollars thinking they're going to save the day. From my experience over my 3 years of running this channel, I've heard a lot of your stories, and I'll tell you what, a lot of you folks find yourself in a bad spot. You know, Jerry told me years ago, he said, John, people are absolutely going to email you with all of their problems, and you're going to find yourself just trying to fix their problem. Well, what I've realized is he's right. A lot of folks have problems out there because they don't know how to manage their trades. It's about learning the strategy. It's a skill. This is a skill we need to learn. So look, in this video, I'm going to go ahead and talk about why I think in 2019, covered call writing and cash secure put selling is the best strategy for 2019. But what I need you to do is to go to YouTube, watch the videos. All you have to do is search covered call writing, watch all the videos so you learn the strategy, you get comfortable with the strategy so you can then do the strategy. I've told you from the jump, it's about getting your experience, and when you get your experience, that's when you truly learn. Look, you could read a book, you could watch a video, but until you do it, until you feel it, you don't own it. And once you own it, trust me, you will learn much quicker. Hey, look, before I get going, if you've never been to my website, I want you to go to ctpdashboard.com and I want you to download all of the free tools I offer. One thing you're going to find, I don't charge a nickel for anything that I do. I offer you up free spreadsheets so you can keep the numbers in front of you so you can see that your trades are profitable. See, I buy stocks, I trade them multiple times, and for me, I need to keep the numbers in front of me. So I created all these free spreadsheets, these covered call spreadsheets, to help us keep the numbers in front of us and up our game, right? I do that for free. Look, it's absurd that anybody would ever pay a nickel for a spreadsheet. Now, while you're there, I want you to download the free version of the CTP dashboard. Look, I upload it with 100 of the best stocks trading now. It gives you a great starting point for your next covered call stock. Look, I offer it up to you for free. There's no hooks. It's a covered call research tool that you can use for free. Now look, if this is the first time you've ever been to my channel and you like what you're hearing, I want you to subscribe to the channel. It's right there and it's free. And hey, look, if you like this video, I want you to bang that like button because it lets me know you like what I'm doing. And what we're doing is this. We are actually influencing other content providers online. Writing a covered call with the married put, it didn't take but 1 week before one of the gurus did a blog post about the married put. And recently, I've seen people talk about using leveraged ETFs to create that income. It's absolutely flattering that people are out there watching my videos. What I hope is that they're learning something, they're subscribing to the channel so they can be a part of this. This is an evolving, growing channel. I have over 3,000 subscribers and it's growing by 150 a month. You know, it has to be the fastest growing covered call and cash secure put channel on YouTube. And here's the deal. I have to thank you for being interested, being motivated, and I'll tell you what, that excites me to come back to do the next Red Hot covered call. It really is that genuine. Because see, I don't ask you for a nickel. I don't try to sell you anything. So if you're here for the very first time watching this video, I'm not going to ask you to buy anything at the end. That's not what we do here. I genuinely show you my trades. We talk about them, so maybe you learn something. And I hope you appreciate that. I put a lot of time into what we do here with the free spreadsheets, the content on Facebook, my website, and the videos. Let's get to the topic of the day. I'm going to tell you why I think covered calls and cash secure puts are the best trading strategy for 2019. And for you salty dog cover call writers, I'm going to show you a cash secured put I used on Friday, cherry picking those profits that I always talk about. Using volatility, I'm going to show you that trade. I'm going to break it down for you, and I think you're going to like it. Now, part of today's topic really has to do with how option buying has become the flavor of the week. In fact, it's been the flavor of the week for the past year. And you see this all the time on all the YouTube lead-ins. You'll see the guy that says that he has 3 trading patterns, or the grandma that says she only puts in 30 minutes a day and she's making millions. Those people, they're selling you an idea. I don't pay for the services. I would not pay for those services. But one thing I'm going to say to you is this. If you're thinking about buying anybody's services, and to me it's absurd that if you're going to pay $1,500 for anybody's service, I mean, are you kidding me? But maybe you will. What I would hope is that you would understand where you're at right now in your trading. What are your objectives? And not to pay for the service and be rich. Are you ready to use the information you're about to buy? See, that was part of my problem. I paid all the gurus the $50 a month, the $300 a month to get that secret sauce. But then I realized I wasn't ready for it. And when I paid them 50 here, 100 there, next thing you know, I felt like I was a loser because I wasn't using the information. So if you're going to pay anybody a nickel for any service, please make sure you're ready to use it. With that said, whether you benefit from it or not does not matter to me. I'm just speaking from experience. You know, I know it's very easy to put the hopes and dreams of where we want to be ahead of the cart. So the reason I'm going to say that writing covered calls and selling cash secure puts, the number one reason is that if we learn this option strategy, it's going to then set you up for all of the other option strategies. Okay, so we start with this very simple, easy, conservative strategy of writing covered calls and selling cash secure puts. The idea is super simple. We own 100 shares of optionable stock. We then give somebody the right, but not the obligation, to take our shares from us at a higher price. We give them 30 days to make that decision, and they pay us a premium. How easy is that? And it really is that easy. You will learn the option process quicker if you do it in small little steps. You know, trying to understand naked options, buying options, selling options. Look, at the end of the day, we want to get focused. We want to have clarity. So when we make these decisions, we make good decisions. Okay? We don't want to go into this willy-nilly. Remember, when you buy naked options, there is a clear and defined deadline for which you can lose everything. The point here is we're seeing all of these lead-ins into all of our videos, and they ultimately are going to cost us money. So before we spend that money, okay, I want to make sure that I understand my expectations. I understand what I'm getting into, and ultimately I'm going to be prepared to use the information I'm paying for. If you want to learn the option strategy, let's start off with writing covered calls, because it is a very conservative strategy, but it's an easy one to learn. So another reason why I think 2019 is going to be a great year to sell premium, I think the markets have gyrated so much where they sold out all of that fluff in the market. So as we enter the new year, all the brokerages ended up buying all of these stocks that were sold off. I'll never forget a guy on CNBC talk about how the S&P 500 had sold off so much it had become a buy. So from that point, I knew if I'd start buying the equities that were selling off, I was probably going to buy at a low risk entry. Well, notice what has happened. We bounced off of that number and we got into the new year. And now, of course, new year, new tax season, they're buying these equities up, right? They're taking all that loose cash and they're now buying. With the big news stories behind us, like the Federal Reserve not raising rates, and we don't really have any geopolitical news that will cause the markets to fluctuate. We're really going to focus on China and the trade war and their economic situation. Really, the markets are back to earnings, right? We're going to get these little news events here or there, but we're back to earnings. I think what Wall Street expects now, it's going to be that Goldilocks situation. Not too hot, not too cold, and I think we could expect that for the most part, the Dow is going to trade right in this range. We're probably going to retest some lows here. We're probably going to retest some highs. I don't think we go much higher than the recent high. And in fact, I think that resistance line right there might be a sell-off point. For me, I'm going to trade this window, and that window is about right here. So as you can see, I started buying things when the Dow was about 24,000. Well, I suspect we find ourselves dancing in this area here, and they'll buy it, they'll sell it. So that's going to give me a great opportunity to buy stocks at a low, maybe at the bottom of a Keltner channel, low risk entry. And then I write a covered call and I hope an out of the money covered call. So then it moves up towards that strike price and I get the higher price for my shares. I get the premium and we can look to do this again. We're going to have volatility in this stock market. That's just where we're at now. That's the new stock market. They run them up to sell them off. That's how they make money. If you didn't believe me the first time I said it way back here, then you have to give me some credit for saying it here. And I think we find ourselves moving forward with that theme. They run them up, sell them off to run them back up. It's how they make money. So for me, I'm going to give you a great 30-day covered call idea. Now, it's not Chevron, although I'm going to use Chevron here. I don't make predictions or recommendations. I'm not certified. You guys already know that. I'm going to show you what I'm going to do in this time, this Goldilocks period, where it's not too hot, not too cold. I can buy a stock and have it trade sideways to higher. And that's the case with Chevron. Chevron just had some earnings that actually caused the stock to go higher. If you see, Chevron has a dividend date coming out here. Now, I've talked about this before. I love writing a covered call after the dividend date, maybe 1 week after the dividend date. So I collect both the premium, the stock appreciation, and the dividend. And in the case of Chevron, they pay $1.12. So it's a juicy dividend. So with Chevron announcing earnings, and you can see Chevron really got a nice little spike here. I'm going to go ahead and write a covered call at this point where I can capture the dividend and capture that stock appreciation and collect the juicy premium. But the picture here is, look at this trading. We get the sell-off, the December sell-off. It has rallied back to where it's stable again. It's trading sideways to higher. Oil is somewhat stable. And here we are with Chevron back at 117. Chevron trades in this nice little window, as you can see, 120 and 110. So that's the range that I love to play Chevron. So when Chevron was trading near 110, I bought some shares. And as it got to earnings, it got higher, I looked to write a covered call. Well, that's how we're going to play the stock market in 2019. We want to find those great stocks that trade in a trading range. And that's why it's important that you stick with me to the channel, because I'm going to do a video. My very next video is going to talk about how we pick stocks trading in a range. If you've never heard of the cover call strategy or cash cure put strategy, you really need to learn the strategy so you can benefit from it. I think the important thing is to understand is we get our financial education and then we get our experience. We do our very first trade so you feel comfortable with it. And then once you do that, I'm telling you, you start to do 1 or 2 or 3 trades and now you are the expert. Okay, I apologize for the video getting a little long here, but I want to show you this trade. You Salty Dog cover call writers are going to appreciate this one. So, of course you know I've been trading Win. Now, Win has absolutely been kicked in the nads for various reasons I've talked about. But now we're starting to get away from that. And recently, with recent earnings, Win has started to catch a little bit of a bid, and it's going higher. So, as you can see, Win has sold off tremendously, just as every stock did, started to base a little bit, and now earnings comes out, and Macau isn't as bad as they thought. So now Wall Street's buying up these casino stocks, and Win being off its high almost 100 points, they're going to look to buy Wynn. Wynn is one of those S&P type companies that pays a decent dividend and quite frankly has a pretty good business. So they buy it up and look what we get. Wynn starts to head higher. Now the market recently over the past couple days have sold off. 350 points here, 250 points there, and Wynn has fallen. It's fallen just like everybody else. It recently hit a high of 130. It has peeled off to as low as 121. And when it fell to 121, it's now hit my radar because now I'm thinking it's hitting support. And sure enough, if you draw a line of support right there, it's falling back to support, so I'm thinking this might be a great opportunity to sell a cash secured put. Now, what does that mean? I'm going to put up the money to buy somebody's shares. I'm only going to give them 30 days to put those shares to me, and I'm going to get paid a premium for that. Now, you probably ask yourself, why would somebody do that? Well, the idea is this. Somewhere in the greater stock, I don't know the reason, but they can't lose any more money than $125 on Wynn. And they're willing to pay an insurance for that, right? So what I did was I wrote a 30-day, $125 cash secured put, and they paid me $5.60 per share to put my money to the side, and now the trade's on. Now, what are my expectations for this trade? I actually think that the markets will find itself a little bit higher, but in the case of Wynn, I get a feeling that the selling is out of it, and it's going to start to head higher. Now, I don't know how much higher, but if it moves away from 125, let's say it moves back towards 130, that $5.60 per share premium I got paid will actually start to shrink, right? Because the likelihood of me being assigned somebody's shares at 125 is becoming unlikely. The premium is starting to shrink. So as Wynn starts to move higher, that premium goes lower. If, let's say, my $5.60 premium got down to $2, well, then I'm going to buy that option back for $2 and I'm going to keep the difference, $3.60 in my pocket. And for me, that's a quick cherry picking cash secure put profit. And look, I'm just playing the volatility. It's not a percentage play, but I use this strategy to cherry pick those moments when there's volatility in the market. And you know what's funny? There are people that do this and they charge up to $6,500 for a monthly webinar. I mean, this is insane. People are paying this much money to learn this stuff. I really should start charging for this. If you learn this, you can really get comfortable with it, and maybe you too can have the same success that I'm having. Now look, before you bang the dislike button because you thought I dissed these 3 trading pattern secret sauce gurus, look, I'm really not. What I'm trying to do is just make sure that you understand my story, where I paid some secret sauce gurus for the information and I just didn't use it because I wasn't ready. See, if I was ready and I had that financial education, then I probably would have been able to use that information. That's really the reason I mentioned that, because what I don't want you to do is have those high expectations, buy that information, and then if you're not ready to do it, you don't have an account set up, or you're just not prepared, you're just going to find that you're going to put money in their pocket. They may be as legit as it comes. You're going to feel mentally down. You might feel like a loser. And quite frankly, that's just not fair to you. So get that education, get that experience. So if you do plan on paying any secret sauce guru anything, just be ready to use that information. Now, if you like this video today, I want you to bang that like button because it lets me know you like what I'm doing. And hey, look, let others know we're talking the good word of the covered call by sharing the video. Hey, I truly do wish you all the best in trading. And look, until next time, I hope on your covered call.